Welcome to Khanversations. I'm Muqtedar, your host, and today I'm going to talk to you about credit histories and countries' credit ratings. The Moody's investor company has downgraded China's credit outlook to negative. And so this is the latest news that's come out today. And it has made the markets very nervous, and the stock prices, and especially those that are China looking, have dropped apparently today on Wall Street. So these credit rating companies can have an impact on the global economy through their means of rating countries and their credit worthiness. So today I'm going to talk a little bit about the Moody's uh, credit rating that it has cut down. It has cut down China's outlook to negative, and last month it also did the same to the United States. So right now, the two global powers, the two most important economies in the world, US, which contributes to about 26% of the global economy, and China, which contributes close to 18, 19, 20% of the global economy. So between the two, half the global economies, at least credit outlook, seems to be negative. So I'm going to talk a little bit about that, talk a little bit about what these ratings are, and what it means in terms of the international political economy. But before I do that, please subscribe to Khanversations, like this video, press the bell icon so you can get notifications about my future videos. And those of you who would like to support Khanversations, please join and become a member. Several of you have already joined, so thank you very much for supporting Khanversations. So this is what Moody says. This is an investor rating company. So what they do is, like individuals. So Alhamdulillah, I have a very good credit rating. So what happens is when I go to the bank and borrow money to buy a car or buy a house or any other consumer product, they look at my credit history and they look at my credit rating. And what my credit rating conveys to the lender or to the bank is that, oh, this person has a reliable track history, they have a reliable income, they don't have much debt, and if you look at their past history, they have paid their dues regularly. So this person is a good person to give a loan to, and so you get a loan. Now, if your rating is slightly lower, you might be a low risk, or as your rating goes down, you become a higher and higher risk. So if someone has a very low credit rating, you know that giving a loan to that person is a high risk enterprise. So in that case, what you do is you hedge your bets by raising the interest rates. So if you have good credit history, you get loans on low interest rates. And if you have a bad credit history, then the rate at which you get loans goes higher and higher. And sometimes you need to have some serious collateral in order to get a loan, especially if you are deemed as not worthy of getting credit. So Moody, what it did was it says that China's credit outlook is negative. So it does rate China reasonably high, and I will show you what China's rating is. Its rating is A1, but it gave it a negative outlook, which means it says that, okay, I will tell you what A1 rating is. It is not the first, second, third, but it's the fourth rating, that in the sense there are three ratings better than A1 that you can potentially get from Moody's. So it's not the first grade, second grade, third grade. It's in the fourth category that China is. And even there, the outlook looks negative. So it would go down to A2. That's what, in the long run, China could become an A2, midterm to short term, long term, it could become A2. So what that means is that, why is Moody saying that? Moody is saying that because of two things. One, that the local governments in China are heavily leveraged and they're heavily borrowed. And so Beijing, the central government, is going to bail out local governments, especially those which have been devastated by the real estate market. And so states which have borrowed a lot of money for investment in development, as I spoke to you on my previous video when I was talking about comparing global economies, I had made the point that China has tremendous capacity for manufacturing, and this capacity has also been kind of subsidized by the state. So there's a lot of investments in manufacturing capacity, in real estate, and other places. So because the subunits of China, states and provinces and cities, are may be in need and are potentially in need of being bailed out, Moody suspects that China is going to be in some kind of a credit problem. And of course, the enduring real estate issue with the real estate market dropping and going through, basically the balloon has burst. And China's high growth rate was coming essentially from real estate growth. And so they were just building, and borrowing, building. And now suddenly they have a lot of unfinished buildings which have no value, they can't be sold. And so there is basically the real estate balloon has burst. And so there's a lot of investments that are going to be lost. And so that is also going to undermine China's economic stability. And therefore, Moody has gone forward and basically gave it a negative outlook. They're not reducing the credit worthiness, but they're saying maybe in the future, they may not be able to be as stable as they are today. So at the moment, they are A1, the fourth category. But it's possible that in the mid to long term, they might become A2. That's what Moody is saying. So if you're giving a long-term loan to China, then think twice. If you're giving a short-term loan, then it's okay. With regards to the US, this was a few weeks ago, 3 weeks ago, I think, that Moody also cut US or kind of undermined the US creditworthiness by giving it also a negative outlook. But the US still has the highest rating, A, capital A, and two A's, AAA. So this 3A's rating is the highest that Moody gives to any country. And I'll show you the list of countries which have this rating. Most of them are Western capitalist liberal democracies which have this high rating. And the reason that Moody has, I keep saying Moody has advanced for giving a negative outlook to the US is basically the dysfunctionality of American politics. The Congress is an utter mess. It's just, I mean, if you ask me which is the most dysfunctional entity on earth, it is the US Congress. It just doesn't do its job, first of all. And whatever it does it in a very chaotic fashion. It's amazing as to how the United States economy continues to grow and America remains a dominant country in the world, in spite of having perhaps the worst parliament and worst set of parliamentarians in the world. So once again, America is going to have a possibility that it may default, or basically the government will be shut down as they are unable to pass the budgets. It's not a problem that the US doesn't have money. The US has money. In fact, the third quarter, I think, has been revised and the GDP has grown by 5.2%, doing better than China. And so the US economy is in a reasonably good shape. Inflation has gone down, unemployment is a historical low, and growth rate is very high. But just because the government is going to be starved of funds because the Congress is unable to come together and pass a budget and spending authorization basically for the executive. So there will be no money with the government. And so as a result of the fact that the government may not have that money, it may not be able to pay salaries. And more importantly, it may not be able to pay the debt servicing. The US has the biggest debt in the world, about $33 trillion. And so imagine the debt payments that it has to make frequently. And if it's not able to make those debt payments, then it'll be technically a default. Not because it cannot, but because of the dysfunctionality of its government. So suspecting that it is quite possible that we have a very irrational bunch of people in the Congress at the moment. One side of the government, the Democrats, are obsessed with giving money to Israel and Ukraine and nothing else. and the Republicans are concerned about giving money to Israel and going after immigration and the border. The Democrats are not interested in the border, and Ukrainians are retaliating by saying we're not interested in the Republicans are just not interested in supporting Ukraine anymore. So they're just fighting over this and basically cutting spending. That has become an excuse for the Republicans to ensure that Biden has a really bad year going into the elections. So this dysfunctionality essentially will mean that the US could potentially default on its payment. I don't think it is going to happen, but that is a possibility. That's why the negative outlook, which is mid-term to long term. So how does Moody rate countries? This is how it does. This is how it rates everything: banks, countries, corporations, etc. It just measures your credit worthiness. So the highest rating is AAA, which means that if you have a commitment, an obligation to make a certain payment, then if you have an AAA rating, then you're judged to be of the highest quality with minimal risk. So basically, if you have AAA rating, which means that giving you a loan has the lowest possible risk. And then as you go down the ratings, basically the risk continues to increase. So at AA, it says this is a good, high quality potential borrower. You can take a risk because the risk is very low. So for AAA, which is the US rating, the risk is minimal. You can still give the US money, even long term, but there is a potential chance the negative outlook is if the Congress basically does something stupid, which it does all the time, then you might not get your payments on time. That's what the negative outlook of the US means. And then the third rating is A, which means that the obligations rated are considered medium grade, and there is a low credit risk. And then you have BAA, which means that these are not high quality borrowers, these are speculative. So there is a moderate credit risk to BAA. So they are saying that if you're going into the speculative realm, then BAA. So it's a low risk, shall we say, or moderate risk investment if you're giving and lending money to BAA, or if you're investing in their stock markets, your pension funds, etc., that are put into sovereign funds of other countries, and so on and so forth. And the same thing with BA and B. And C is the worst category. It says that that these are countries with really poor record and very high credit risk. So C, if you just have a C, that is a very high credit risk. And then on top of that, they also give numbers 1, 2, 3. So what happens is, let's say your credit rating is A. So it tells you that in the top 3 categories you are. You are quite okay with a little credit risk. But if you say A1, then you're saying in this category you're the best or on top. And then A3 would be, okay, you're in this category, but you are a little more riskier. So I don't know what the difference would be between A2 and A3 when you're actually putting your money out there. But if you have 2 options of investing, then you should go with A2 and not A3. That's what the ratings come in. But if you have to give a loan to, say, to a country, then you say the rating is A2, then you could say, well, I could give it to someone who has A, where there's risk, but since I'm giving it to A2, I'm going to hike interest rates a little bit more. So that is how the Moody's credit rating really works. Most countries are all like that. So if you look at this data that I have got from Trading Economics, the United States, as you can see in this chart, is rated AAA with the arrow pointing down that says it has a negative outlook. So you can see from the score that it gets is most of the countries there: Australia, Canada, Denmark, Germany. These are all liberal democracies. So I don't know why Germany is AAA with stable, because it has a negative GDP growth this year. It is quite possible this quarter, and so it's quite possible that Germany might be technically in a recession next quarter. but it doesn't get negative rating. I guess it has a long history of paying off its debts, and it has its debt to GDP ratio is much lower than the US. So I guess Germany is a better bet than the US at the moment if you're thinking of lending them money. Now, if you look at China, China is in the third category. That is, it's not AAA, it's not AA, it is A. And in A, it's in the top category. So in the third category, it's in the upper echelons of the third category, and it has, as I said, a negative outlook. You can see which countries are in its category. China, Japan are AA. Saudi Arabia is AA, but the outlook is positive. Whereas you can see the Slovakia, these are not very exciting economies to study. So where is India in all of this? So if you look at India, India is in the third category. It's not in the AAA. It is not AA. It is not A. It is BAA. But in BAA also it is in the lower category. So basically they're saying that investments and loans to India have a speculative character. It means you can make money and you cannot. So there's a higher risk in lending to India, and the risk is reasonably high. So if India is borrowing money, fortunately, India is not borrowing much money. India's debt to GDP ratio is about 69%. So India's debt is much lower than its GDP. Unlike the US, for example, US GDP is $27 trillion, its debt is $33 trillion. So the US is borrowing more than it is making, whereas India is borrowing less than it's making. So India's GDP is roughly around $4 trillion, and its debt is about 2.8. But nevertheless, it's probably paying higher interest rates than, say, China or the US when they borrow money from the markets. And then if for those of you who are curious about Pakistan, you can see Pakistan is just on the bottom, CAA. So in the C category, it is number 3 category. So that is a big high risk. Lending money to Pakistan is a very high risk enterprise. It's not even speculative. This is just a bad idea. It's not speculative. I mean, you don't think you can make much profit. So that's a bit of a dampener. And you can understand that with all the crises that Pakistan has been having from an economic perspective. You can understand very clearly why it's having, because its rating is CAA 3, and that's why IMF is hesitant to easily extend loans to it when it's having trouble paying off. This is not the only criteria. There are lots of other criteria which also you would like to look at when you're giving and lending money to countries. You would like to look at their current account balance, whether they have foreign currency or not. Like India has $600 billion of reserves. So if you give money to India, you know they'll pay you back in dollars because they have dollars. But there might be countries which may not be that risky to lend to, but they may not have a high reserve of foreign currency. So then you may invest there, but they may not have the foreign currency to pay back or pay interest or serve the debts. Then they will go into trouble with IMF. So those are some of the challenges that countries can have problems otherwise. So what does all of this mean? Well, what it means is that the outlook for the short-term to medium-term outlook for the global economy is a bit negative, because both the two economies, China and the US, now have a negative outlook for Moody, which means if you are a big-time investor, if you are, say, a hedge fund manager, or you are running somebody's pension funds, Canada pension funds, or you're running some of these big Apple, I don't know whether Apple has a pension fund or not, but there are countries which have pension funds, countries which have sovereign wealth funds. And if you're managing that account and you're thinking, okay, where should I invest my money? Should I invest it in developed economies where the rate of returns are low, but they're guaranteed? or should I invest it in developing countries like India, where there's a slight risk, it's very speculative, but the rate of return will be higher. So if you're thinking, okay, I'm going to go for a higher rate of return, and so I will look at developing countries where the markets are growing faster. And so there, then this rating can come in handy. So should I invest in Indonesia? Should I invest in Malaysia? Or should I do it in Vietnam or India or Cambodia or Philippines? Then the Moody's rating can give you some direction as to which country you pick. And then, of course, you're not just going to do based on that. You do your due diligence, I hope, that you will go and see which industry you're trying to invest in, which sector, and what is the potential of that investment, etc. But in the preliminary broad sense, this is how it helps. And clearly, you can see the way the markets reacted today to the negative outlook from Moody for China. It tells you that these credit ratings have some impact on the global economy. So I hope you found this short discussion about credit rating interesting. I'm just preparing for the classes that I'm going to be teaching next semester on failed states and good governance. And one of the things that I will be talking about is the credit worthiness of countries itself and how managing that also is part of becoming a developed country. If you want to continue to borrow money in order to invest in your development and growth, you have to make sure that your credit rating gets higher and higher so that when you borrow money, you are able to borrow it on lower interest rates and more people are willing to lend the money to you. So I hope, so that's the logic behind this conversation today. Please, if you have not subscribed to Khanversations yet, please subscribe to Khanversations, like the video, press the bell icon. And if you like to invest in Khanversations, please join and become a member. Until next time, I'm your host, Muqtedar Khan.